Okay, let's try and untack this. April 22nd, 2025. Quite a day in the markets, huh?
Definitely some significant moves.
So we're diving deep into what went down and maybe more importantly, why. We've got notes, market analysis, all from that day, April 22nd.
Right.
And the goal here is to really understand the causes, the potential ripple effects, especially looking at President Trump's trade policies.
Yeah, and it's striking, actually. All our sources seem to zero in on exactly that Trump's renewed focus on trade, particularly with China. That looks like the main trigger.
Seems so. And it's not just trade, is it? The sources also highlight, investors shifting money around,
Uh-huh. Towards safer assets, it seems.
like gold and even Bitcoin, which is interesting. Plus, you have Trump making noise about the Federal Reserve again.
And always a factor.
And then there's this lingering question was this just a blip or is it signaling more instability ahead? So yeah, let's get into the specifics.
Okay, first things first, the market itself. The immediate fallout on the 22nd.
Right. The numbers. Pretty
No.
stark. The Dow Jones Industrial Average, it dropped 2.48%.
Not insignificant.
No. And the S&P 500, down 2.36%. NASDAQ took the biggest hit, though.
Tech stocks often do in these situations. What was the figure?
Down 2.55%. So across the board, really notable drops for just one day.
But then, interestingly, the pre-market futures for the next day showed a little bit of green.
Oh, yeah. How much?
Just around 0.4% up. Pre-market is just an early indicator.
Yeah, based on overnight trading.
Exactly. So maybe some, I don't know, cautious optimism, a feeling the worst was over.
Maybe. But like you said, 0.4% doesn't exactly wipe out a 2.5% loss.
Definitely not a full recovery, no. More like the market catching its breath.
Okay, so let's link that drop to what the sources say is the main culprit. These renewed trade war fears.
Yes. It seems President Trump's tariffs on Chinese goods, the ones announced earlier, April 2nd,
Right.
those really brought the anxiety back, even though there had been a bit of a pause before that.
And it wasn't just the U.S., right? India got involved too.
That's another piece. India putting that 12% tariff on Chinese steel. It shows it's not just a U.S.-China thing, maybe broader tensions.
And then China's ambassador basically says, bring it on, we're ready.
Not exactly calming words for the market, no. That kind of rhetoric definitely fuels the fire.
So remind us, why is the market so sensitive to this? Why does this trade talk cause such a reaction?
Well, think about it simply. Tariffs are taxes on imports.
Okay.
So U.S. companies that rely heavily on Chinese imports and the notes mention big names like Tesla, like Walmart.
Yeah, companies with huge supply chains.
Exactly. For them, it means higher costs, straight up. And those costs often get passed on to consumers.
Leading to higher prices,
Yeah.
inflation.
Potentially, yes,
Hmm.
at least short-term inflation. And markets generally view that negatively squeezes profits, might hurt consumer spending. It creates uncertainty.
Makes sense. So with all that uncertainty swirling, investors start looking for somewhere safer to park their cash.
Which brings us to the safe haven assets.
Gold and Bitcoin.
And the reaction there was pretty clear. Gold futures hit a record high,
Wow, what was the number?
$3,407. That's a classic flight to safety move you see when stocks get volatile.
Absolutely. Gold feels tangible, safe, but Bitcoin, its performance really stands out here, doesn't it?
It really does. Up 3.5% roughly, reaching $87,645.
And that was after dipping initially.
Yeah, it recovered from a dip right after the tariff news broke, and it actually outperformed most other cryptocurrencies, getting closer to that all-time high again.
Around $110,000 was it?
One. So what does this tell us? Maybe that investors are increasingly seeing Bitcoin differently.
As a potential store of value, maybe? Like digital gold?
That's the narrative, certainly.
Uh-uh.
And it fits with the other data point,
Oh.
the U.S. dollar index, the DXY.
Ah, the dollar strength. What was that doing?
It was trending downwards. And historically, when there's economic uncertainty and the dollar weakens,
Gold and Bitcoin often benefit.
exactly, that correlation seems to be holding here.
Okay, so trade wars, market drops, safe havens rising. But there's another big piece here, President Trump and the Federal Reserve.
Ah, yes, his public commentary.
Very public, using social media, X, to criticize Jerome Powell, the Fed chair.
Right, calling for rate cuts, preemptive cuts, he said, to avoid a recession.
What was his justification, according to the sources?
Well, he pointed to falling food prices, something he called the Biden energy crisis, basically arguing inflation was low or falling.
Implying the current rates were too high.
Precisely.
Yeah.
And he compared the U.S. situation to Europe, noting they'd already cut rates multiple times, I think 7 times was mentioned.
So he's basically saying the Fed is behind the curve and needs to act now. What's the potential impact of him saying this so publicly?
Well, look, the Fed is supposed to be independent.
Supposed to be, yeah.
But this kind of direct pressure from the president,
Yeah.
it inevitably puts them under scrutiny. It adds political pressure to maybe consider lowering rates.
And if they did lower rates,
That would likely weaken the U.S. dollar further.
which, as we just discussed, could help gold and Bitcoin even more.
It's all interconnected, exactly.
Speaking of Bitcoin, let's circle back to that. Its resilience seems pretty significant in this whole mess.
It does. Holding up well after the tariff news is one thing, but look at the ETF inflows.
Exchange-traded funds? What's the data there?
As of April 21st, the day before this big drop, these ETFs held over 39,000 Bitcoin.
39,000, that's a lot.
It signifies real institutional interest. Big money moving in, seeing it as a legitimate asset class.
And didn't one of the sources mention some analysis? CNBC, I think, Tom Lee?
Yes, suggesting Bitcoin could eventually rival, maybe even surpass gold's market cap.
Why? What's the argument?
Scarcity, mainly. Its limited supply. Plus, growing adoption as a hedge against exactly this kind of volatility.
The digital gold idea again.
And notice how it stood out compared to most other cryptocurrencies, the altcoins. They didn't fare nearly as well. That strengthens the narrative.
Interesting. Okay, so things are volatile, Bitcoin's doing well, but there's still this undercurrent of worry, isn't there, that things could get worse?
There is. One source put it very bluntly, asking something like, is Trump testing how hard he can push before the market really bleeds?
Bleeds, meaning forced selling.
Exactly. The concern is, if the S&P 500 drops much further, the source mentioned maybe a 15% fall, we were already down about 10% cumulatively at that point.
Okay.
That could force the big institutional players, the pension funds, the endowments, to sell off assets because of their risk mandates.
Creating a sort of fire sale.
Potentially.
Yeah.
Which, as the source noted, could be a wealth-building opportunity for anyone sitting on cash.
Right. A tough situation for most, but an opening for a few. The notes also mentioned low trading volume before this happened.
Yeah, in the couple of weeks prior. The interpretation offered was maybe the big players, the
Right.
whales.
Meaning large holders.
Yes. Maybe they underestimated Trump's resolve. They thought perhaps it was just talk, not action. The low volume suggests they weren't repositioning aggressively.
An assumption that turned out wrong, it seems. And the commentary didn't stop there, did it? There was also speculation about why Trump was attacking the Fed share at this specific moment.
Yes, a rather pointed suggestion that it might be less about economic strategy and more about, well, ego.
Ego.
The idea being someone isn't obeying him, so he has to crush them without necessarily a grand strategic plan behind it.
That adds a whole layer of unpredictability if personal feelings are driving policy comment.
It certainly does. And it makes things even more complex when you factor in the bond market.
Right. It's not just about the Fed cutting short-term rates, is it?
Not at all, because even if the Fed does cut those short-term rates,
Which Trump is calling for.
right, the broader uncertainty, especially around trade and the U.S. economy's outlook, is pushing up the yields on mid- and long-term government bonds.
Why is that? More risk.
Essentially, yes. Investors demand a higher return, a default premium, to hold longer-term debt if they're worried about instability. And since most U.S. government debt is mid to long-term,
Those rising yields could cancel out the benefit of lower short-term rates.
it could certainly complicate things and offset some of the intended stimulus. It's a real balancing act.
So, given all this, trade, Fed pressure, bonds, market nerves, who's actually in the driver's seat here? Where does the power lie to calm things down?
Well, the sources seem pretty clear on this. The person holding the switch, the one who can flip the sell-off on or off,
It's President Trump.
largely, yes. According to this analysis, if he were to de-escalate the tariffs, stop the public targeting of Powell, whose term is nearly up anyway.
Things could change quickly.
That seems to be the implication. The market could potentially stabilize quite fast.
But the big question is, will he? Or can his advisors persuade him? The notes sounded a bit skeptical about that.
The phrasing used was quite evocative, that he's in a fired-up, someone's not listening to me mode.
Doesn't sound like someone easily swayed.
It suggests that influencing his direction might be, let's say, challenging at this particular moment.
Okay. One last piece of the puzzle mentioned in the sources, M2 money supply. What's the relevance of that?
Right, M2. It's a broad measure of money, circulating cash, checking accounts, things easily converted to cash.
And what's the situation there?
The data showed it's near all-time highs, not just in the U.S., but Japan, China, the Eurozone too, major economies.
So there's a lot of money sloshing around the system.
A huge amount of liquidity. And the potential implication is if central banks stay relatively loose with policy.
Keep rates low or don't tighten aggressively.
Exactly. That liquidity could fuel further asset price inflation, especially in things like gold, maybe crypto, as people look for places to put that money if traditional markets feel risky. It's the bigger inflationary backdrop.
Got it. A potential accelerant for these safe haven flows. Okay, so bringing this all together for our listener, based on the market overview from the 22nd, what were the key takeaways or maybe even recommendations for investors facing this?
Well, given that specific context, the advice was pretty focused. First, diversification into those safe havens we discussed. Gold, maybe via an ETF like GLD, and Bitcoin, either ETFs or holding it directly. It was seen as a hedge against trade risks and a potentially weaker dollar.
Okay, diversify. What else?
Second, keep a very close eye on the Fed. Watch for any signals about rate cuts. That could be a major market mover.
Makes sense. Stay vigilant on policy.
Third, be selective with stocks. Maybe favor companies less exposed to China and their supply chains to minimize that direct tariff impact.
Tactical positioning.
Fourth, obviously, stay informed on the trade talks themselves. Any hint of de-escalation or further escalation is key. And finally, even with the volatility, consider maybe a small long-term position in Bitcoin.
Why long-term?
Because of that growing institutional adoption and its potential role as, well, digital gold over time. Less of a short-term trade, more of a strategic holding.
So a mix of caution, defense, staying informed, and maybe a bit of strategic allocation to alternatives. Okay, let's try and summarize. What's the core message from this deep dive?
I think the main takeaway is that the market turbulence on April 22nd really seemed to be driven, first and foremost, by those renewed trade war fears sparked by President Trump's policies.
Right.
And that set off this chain reaction. The sell-off, the flight to safety in gold and Bitcoin, the added pressure on the Fed. It's a complex mix.
And it really highlights the power one individual seems to hold right now. That's the provocative thought the sources leave us with, isn't it?
Absolutely. The idea that President Trump's next move on tariffs on the Fed could be the deciding factor for the market's direction in the near term.
It really makes you think about the concentration of that kind of influence.
It does. And it means this is very much an evolving situation. Definitely want to keep watching closely. For anyone trying to navigate the current economic landscape, the actions of these key players are critical right now.